What's up, everybody? Good morning. Afternoon. Something. All I want to know is when Tesla 100. Frankly, I'm surprised it hasn't dropped there yet. But not this week, most likely. But we'll see. We'll go over everything. When SPX 6000, that's still really not mechanically possible. Maybe. Maybe if we make it through this quarter. Things aren't looking super great, despite the Fed's decision to do nothing. There's some, well, we'll get into it, but there's some macroeconomic stuff that's starting to be negatively correlated where it shouldn't be. We'll cover that a bit more later. But essentially, currency markets are having some issues. Did you enjoy Dork making you a nice home cooked dinner last night? It wasn't bad for his first time. I don't think GME is going to $8. Yeah, but how was the meal? No worries, guitar stuff. I'll see you later, man. All right. Let's get. I don't want to spend all day doing this because I actually have a lot of stuff to run through on the macro side. So let's get through. We'll go through memes and individual tickers till about one o'clock. So the next 27 minutes or so. And then we'll go over Mag 7 after that. 30 minutes. Then we'll dive into macro into the end of the day. Hopefully we can keep that under an hour. Yeah, we'll see. Start with Upstart. I'll start with GMA so I can get those people out of here as quickly as possible. um, I'm just kidding. No, so GMA's seeing a little bit of covering over the last 3 days. XRT hasn't really seen any significant shorting. Probably near a floor, I would say, into earnings, which are coming this Tuesday on the 26th after hours. Projected EPS is about 29 cents a share. I think revenue might be a little higher, around 2.15. EPS probably around 32 cents. I can't think of any reason that they would fall below analysts' estimates. So it looks like earnings will be, maybe a slight beat to neutral. The only problem I foresee with that is, although GME is a little bit illiquid, its underlying ETFs are not. And so on a beat, we could see GME shorted from whatever after hours price improvement it gets, right back down to spot, and then we could see XRT slapped on reg show, and then kind of grind down further over the next couple months before that has to be resolved. So there's definitely plenty of padding available. Volatility shorting hasn't been particularly aggressive over the last 3 months, and long short positions on the stock have grown, but synthetic short positions on the stock have not. Um, which kind of leaves it in a risky spot for price improvement. Like we could see overnight price improvement due to earnings, but that could get shorted away really fast. And unless there's some continued plan for revenue streams, most investors aren't really going to care if they beat on EPS in their best quarter, without consistently having positive net profits, right? So, the SG&A reductions come with a cost, and that's going to continue to weigh on institutional investors wanting to pick up GME. There's plenty of companies out there with solid growth plans and good cash flows and net positive or positive net profit, right? That are far more attractive investments. And so, there's a very good chance that if there is no forward guidance again, um, that, any price improvement gained from the earnings beat will be quickly lost. I don't, I wish I could give you guys something more positive than that, but until RC does something with that money, besides buying US Treasuries, because having your annualized growth rate pinned to the risk-free rate isn't exactly bullish. This is where the company is, right? And it could be another year of store closures and slight declines in revenues before we even see them attempt to push forward anything else. So be prepared for that. Be prepared for a lack of guidance at earnings, because that's what we should expect after all this time. And just know that there's plenty of liquidity there to short it back down should anything positive happen. So anyway, on to Upstart, which is a little bit more compelling. The Fed decision this week has moved rate expectations for 2024. Fed fund futures are now pricing in just under 3 rate cuts, around like 74 points before the end of the year. For the short term, this is bullish for Upstart, right? It implies that credit markets will loosen into the back half of 2024, and they will be able to shake some of those loans off of their balance sheet and continue lending, and they'll be able to lend at a lower rate, which is going to increase the pool of available borrowers. It's all the good stuff that we generally understand about why Upstart's not a bad investment when credit markets are sufficiently liquid, right? And so for the time being, unless we experience a credit event, or at least until the SLOOS report comes out, that's good for Upstart, right? If when we get the SLOS report, which I think we get in April, and it's not showing a lot of intrabank credit liquidity, that could be bearish once again for Upstart. But we got a little window here. We've got some call buying that started last Thursday. The declining markets didn't really help with price improvement Friday. Had markets gone up, Upstart probably would have retested that 2750 level, but unfortunately declining indexes provide liquidity. But we still have call buying. We still have dealer delta and gamma picking up. Gamma is positive. It's above GN and DN. with really the only resistance to the upside sitting at that 2750 mark. And we are approaching the ETF FTD period, which will begin into the end of this week and continue through next week. That offers up a little bit of opportunity to have some of the volume on the long side as short FTDs are cleared out of the ETFs, and that could help additionally pressure the positions that are already on the options chain. I think a move towards Gamma Max is probably not out of the question on a sufficient break of the 2750 strike. So that's got a little bit of potential. We do see that the tips are kind of closing out. Liquidity is getting a little tighter, and volatility is picking up a bit. So looks pretty good. I wouldn't bet the house on it, but it's definitely at least stable right here. It might be a good opportunity for some debit spreads. I know Ivy's a little high, but calls aren't too expensive. I picked up a few last week at 26 and 27. Um, and we'll keep an eye on the liquidity intraday to make sure that covering's continuing to go on. The last round of covering, didn't really, we got a big sell off, right? And so that's what provided the liquidity from earnings. And then, the little bit of covering we got post sell off really didn't create a lot of price improvement. Since then, we haven't had really any covering at all. So yeah, that's kind of where we're at. Fubo, getting substantially more liquid now. We continue to find buy support at the 150 level. It seems like there is far more than enough interested parties at that price and that strike, to keep prices from falling any further, despite the fact that we are substantially more illiquid and we've been shorted significantly harder over the last 2 weeks than we have in the last several months. But still accumulation. Obviously, this can still be shorted more. The range down to 125, 103 is still very much open. If IWM were to fail substantially in the next couple of weeks, that could have a negative effect on Fubo. But so far, a lot of buyers here. Definitely nobody missing the opportunity to pick up Fubo at $1.50. Just nobody buying it any higher. um, so we'll continue to keep an eye on that. I know their next earnings is coming up in a couple months. That should be hopefully a continuation of the last 4 earnings where we've seen positive improvement. Still no word, I don't think, on the lawsuit or anything like that yet. But that'll all have substantial effect should there be any news on it. How much theta for Upstart? Monthly contracts? Maybe monthly if you're gonna sell something against it. Otherwise, you might want like 45 DTE. Generally speaking, Upstart doesn't really take a very long time to run. Like the initial run's usually pretty quick, but you do want coverage through the ETF FTD period, which kind of pushes you out to like the 5th at a minimum. So 14 days of decay. If you got a 45-day contract, you'd just be hitting like the 30-day drop off by the time the ETF FTD period was over. $150 is good for longs then. Well, it's either good for longs or, something negative will happen and it's really bad. But I mean, all I can say is that there's a lot of buyers at 150, right? Despite the short interest in the stock growing, the price has stayed the same. That's generally indicative that people are willing to buy the underlying at the price it's at, because it's not really dropping any lower. We've had a couple dips below 150 and they haven't lasted long. Now, I don't know if that's me and Atomic's massive block of sold calls. I'm not really sure, but there's support there. So is what it is for now. Top, it got a little bit of liquidity, netted off some through this period where we got a tiny bit of price improvement. That seems to be mostly over for now. It's getting kind of shorted back down again, or they're just preparing for the financial statement release. I had April 19s on this. I closed them. I'm probably going to reopen something with a little bit more theta, so I can wait out the financial report, which still hasn't happened despite this saying tomorrow. That's not confirmed. But I will say that when the financial report is released, there is a little bit more liquidity here. So they may have a little bit more control of price, and the volume or volatility may not be as crazy. But that also depends heavily on what the report says. Remember, this is kind of a coin flip. They could easily just declare bankruptcy and the price could drop to 50 cents, 35 cents. If they make it to the end of the month, which is getting very close, without releasing that financial statement, they're at risk of delisting. And I don't think they'll be granted another extension. So that's another factor to consider. I wouldn't put a lot of money into top, but it does have some potential to run should everything perfectly fall into place. Don't worry, I'm here. You can start. Thanks, Carl. Beyond, the one that I'm sure you all want to know about, has remained on Reg Show. There was a bit of a sell-off and a bit of covering actually after they announced a shelf offer, but they don't seem to have done anything with the shelf offer, which is similar to what happened last time. They announced a shelf offer back in, oh Jesus, I forget the year, but the current shelf offer is kind of just a repeat of that one. So old news spun up to be new news. They have a standing shelf offer, but I think price is still too low for them to act on it. We're now getting to the point where we're just past the earnings period on FTDs generated while on Reg Show. Those will be generated largely in the ETFs. That ETF covering won't come until the end of April from this period. So I don't expect any price action from this to have, or any FTDs from this to have any significant effect on the current conditions. But in the future, if this is, off Reg Show by the end of March or, beginning of April, this will probably put it back on Reg Show into the beginning of May. So it's important, but more important for the continuation of this like on and off Reg Show cycle than it is for the current Reg Show cycle. For this, what we care about is that it remains on Reg Show through the ETF FTD period, which, like I said, is probably going to be the end of this week and all the way through next week, maybe a little bit on the following Monday, because I think next week ends on the 5th. So yeah, we might still have some latent ETF FTDs all the way out as far as the 8th. As long as those ETF FTDs come in and it remains on Reg Show, that should provide more positive pressure. Hopefully we can break back above trend at around 9 to 950. Hold up. There we go. And I will update these now for you guys so you have them. We've got the... Hold on one second. I don't think these have been contracting much. We've got... Okay, so we've got DN at 989, GN at 931. So if we can break through those, that's where you're looking for that run off to trigger the rest of the liquidity to be realized and the removal from Reg Show to occur right around the time it falls back through those levels. Um, anyway, that's it for Beyond. Anything else? Okay, we got about 10 minutes. If you guys have any tickers you want me to take a look at before I start on the Mag 7. I'm gonna Tesla's part of the Mag 7 SHA. TLT, maybe BTU. Okay. MU, please. All right. Micron, TLT, BTU. All right. BLTs or BTUs. BLT. BTU's been holding the trend. It started to bounce off of trend with some positive news out of China, and then China failed to move forward their midterm lending facility, and kept it, I believe, at 3.45% at the last meeting, even though the meeting prior, the short term lending facility had its rate cut. That has not been bullish for China. It's made investors uncertain again, kind of right back to where we were 2 months ago, where people were not very confident in China's recovery, and this is going to keep happening. I expect it'll drive a lot of volatility in BTU, but I don't think BTU's profits are getting much worse, right? So I think BTU will probably stay pretty stable. I still think, there's opportunities for CSP under 2350. Even if this loses its trend and fails, you know, uh, the 20 and $18 ranges are still compelling buy opportunities, I think, on it. Should it drop off, like on a China economic collapse or something like that. They still sell coal to a lot of other people. Germany's recession has prompted the conversion of nat gas plants back to coal. India's coal demand is still growing. So we do have some factors offsetting the absolute reliance on China, but it's still very important. So I expect if China does run into a situation like that, yes, it'll have a negative effect on BTU's price, but I don't think it will persist for long. As far as the company itself goes, I think they're very stable. They're fine. Their cash flows are okay. Not as good as they could be if Chinese demand was up, but more than sufficient to continue operations profitably, which is a good place, right? It's a good place to be. TLT. So I know some of you know that I am currently short TLT. It really hasn't bounced much. It tapped my price target. I took some profits. Um, I very well may short it again. Although I'm probably gonna wait, and I'm gonna go over this in the macro stuff a bit more, but there's some issues right now with dollar and yuan, especially following the most recent BOJ decision, and then even more so following the BOJ's announcement to likely raise rates again in April, which would put the Bank of Japan at a positive rate. This has had a dramatic impact on the yuan and the dollar. And largely due to significant activity in the JGB market. Without getting into how all of those are interrelated or the risk they present right now, I will say that we still have a very good chance to see the 20-year rise on the back end of the curve. I don't think we're in any kind of position currently to see rate cuts out of the Fed. I think inflation expectations are moving up even faster than we can price in more rate cuts on Fed fund futures, and that's kind of conflicting. So if you're up and you were shorting TLT back when it was around like 98, you're still in a very good range to take profits, and we'll kind of wait for China to stop buying all our treasuries so much, because that is putting positive pressure on the value of the bonds currently. So this is probably I'd imagine that's the reason for the question is that you're still short TLT. So yeah, I think it's a decent time to not be in it, but or extend exposure because China's going to keep buying up bonds for the time being until something breaks. Any general comments on commodities post FOMC? Yeah, it doesn't look like they've softened much. We did get a little bit of rejection in the 2 days following the post FOMC, but I would say generally speaking, there's still a lot of currency fears driving interest in precious metals. I don't know if I should include copper as a precious metal, but it's essential for manufacturing. And we've seen massive spikes in both gold and silver. I think lumber's been pretty active. Oil, obviously, energy has been going up. Nat gas is um, probably going to see some effects from that as well. Shipping costs are continuing to rise, and the inflationary effect of that is going to continue to present itself, which means that there's going to be higher demand for futures contracts at lower prices from corporations that are going to need those materials later on, and they want to lock in the current price. What was the last one? MU. I mean, what? It bumped a bunch on earnings. It's got a dividend coming up of 11 cents a share. That might have a slightly negative effect, but I doubt this is completely done. I'm sure it's well above Gamma Max. Let me see if I have the options data on it. I do. Yeah, it's significantly above Gamma Max currently. Gamma Max is at 99.78. Generally, when these tech stocks rocket up through GM like that, they either come back really quickly or they trade very, very flat while realized vol is crushed out over the next several days, and then Gamma Max is given time to rise above spot, at which point they can continue upward. So I would say like flat on the peak. So, that like 113 level um to down is the most likely scenario. Usually these breakouts are pretty good for selling out of the money cover calls because the call side volatility spikes so hard and there's huge demand for calls. So if you can sell them in the short term while vol crushes out, that can be pretty advantageous. You just want to make sure that you're far enough out of the money that you don't get clipped on any kind of crazy price action, right? Like you don't want to be at like the 115 strike because that's super risky, but maybe like the 120 or something like that. I will say that it's been 2 days since earnings, and Gamma Max hasn't moved up all that much, which would tell me that people aren't continuing to buy out of the money calls, at least not in any significant number, and that people don't have a lot of confidence that the price is going to stay at these levels. I would say that's maybe the most bearish part of it. Bot call Delta fell off pretty hard on Friday. Gamma's still positive on it though, which makes the upside volatility kind of risky. And then looks like the supportive charm fell off alongside those weekly calls as well. They were mostly from earnings, right? If Fubo goes sub $1, I'm thinking about buying 2026 $3 leaps and just looking for a run to sell. Do you think there's a good chance they go out of business with Disney, Fox, Warner competitor? I think there's a very good chance that the DOJ steps in at some point to deal with that. But right now, as far as anyone is concerned, that competitor doesn't currently exist. But what does exist is that that group of media giants are, pricing up the cost of content for Fubo, which does make their business a bit less profitable. So, I would say that yeah, there's some risk from the current, like price manipulation in that sector, from Disney, Fox, Warner, but I wouldn't say that there's any risk of the new platform taking any market share because it doesn't exist. And there's probably a very good chance that they could get an injunction against its formation before it does exist. And I don't think that they're the only media company, like streaming media company, that's going to probably do that either. I could see. I think didn't YouTube also file suit, and someone else, I believe. There's a few others pressing or jockeying to do the same, so there might be a more united front, which would probably add to investor confidence and help share price. All right, let's get started on the Mag 7, or, the bigger tech stocks. Apple dropped off pretty hard into the end of last week and recovered a bit on Friday. Still remained below the 72.50 level and that kind of all important strike at 75. I know some of you are aware that I sold short call spreads on it at 72.50, 75 and 75, 77.50 for this coming week. Delta's still negative, Gamma's slightly positive. It is below, actually I think it closed above, yeah, Delta neutral's at 171.48 as of Friday, so it closed just above it, but it could easily slip back below it. Trading so directly in line with the dealer's neutral position on Delta is generally not very bullish, more of kind of like a sideways thing. I still think that Apple offers a lot of opportunities for call spread selling, even though they're not the most valuable return. They tend to be very reliable. I've been a like seller of calls on Apple now for, this has got to be what, like the fifth week. I think I've been saying this. It continues to be a decent position to be in. Whereas the short side, has had its moments, but not like the purely short side, but not particularly profitable. That's kind of the problem with this really slow grind down. And this is kind of inevitable on Apple because, everyone wants to buy it. It's in every ETF, it's in every mutual fund. Everybody's pumping their 401k into it every week, right? And so that kind of stabilizes its downside to some degree outside of massive sell-offs, right? So really bad news like the DOJ thing that can have, some effect. But most of the out of the money, like positive positioning that had occurred on the Google news just fell right off the second the DOJ news came out. That's probably going to continue to weigh on price action over the coming months until there's more news on it. Those things generally don't move very quickly. But it will be a risk that investors consider, especially since the BOJ has commented a couple times now on seeking to break Apple up. I mean, China's trying to pin to the USD. That's what they do. They pin their exchange rate, but I'll go into that later. Well, the problem is they're failing to pin their exchange rate a lot. Next up, we've got AMD. AMD looks like it found a little bit of support into the back half of last week. Kind of right on trend. This could be tentatively bullish. I think it's held above gamma neutral, and this is the low on Friday was in fact a test of gamma neutral, which is now at 173.78. DN's still very far out of the money. There has been a pretty continuous reduction in total delta on the chain, but gamma remains positive. So we're losing some longer dated call positioning, but shorter dated call positioning still staying in the stock. There is a metric fuck ton of short puts on AMD. I think more than at any other point and since we've been tracking it. So still quite a lot of bulls. At least on the short put side, if not on the long call side. And call interest, although it did fall off pretty substantially over the last 2 weeks, is still fairly stable, and bot call delta is still slightly positive. So if this loses GN, pretty bearish, but if it starts to recover off of GN, I think things get a bit more bullish again at like 193, and gamma max is still up around like 213 or so. So this one could bounce or fail. I think a failure would be pretty obvious on this downside here. And there's about $6 of range before that happens. I would say a breakout on the upper trend, very bullish though, and that's around $82. Amazon. Someone had wanted to go long on this week, and that didn't look particularly good. I don't remember who it was, but shit. 1 second. I accidentally closed my window. You bitch. There we go. Amazon still looks really stable. Delta's not really going anywhere. Gamma's kind of oscillated up and down, but stayed mostly positive. This last week, some of the bot call delta fell off a bit following the OPEX, but not really more than you would expect. And that is still positive. Gamma's still positive. It's got some range on it between like the 164 and 180 250 level, 165 and 180 250 level. And it can kind of chop around in that range, but I would say that for the most part options look pretty stable. There has been a slight decline over the last few weeks in sold puts, but not much. So everybody playing Amazon right now is pretty confident Amazon's at least going to stay at the price that it's currently at. I would say any significant price changes are probably going to come alongside the indexes and not because of moves in the underlying. So this may actually be a good target for like a condor, since price act like there's not a ton of call interest, but there's not a lot of put interest. Things are pretty flat. It's traded in a pretty flat range over the last 2 months almost. I mean, if I back off of this and go out to like the daily, it really hasn't done a lot. There's been some slight improvements, but it's been pretty channel locked the whole time. Even back here before it moved up a little, and I forget what the news was here. I think it had something to do with inflation expectations or something like that. But it's been pretty range bound, and I think it'll continue to be. So it might be a good idea to just find technical support and resistance for a week and kind of plan on it staying within that range. Google's not really stopped rocketing. It's not moving up on a ton of interest or volume. Um, but the announcement from Apple last week that they were looking into using the Google AI in their products was obviously very bullish for them. That continued to exacerbate a bull run that started kind of back when it bottomed out around Delta Neutral. Uh, was that like 2 weeks ago now? It still looks pretty good. Call interest hasn't dropped. Delta's been picking up. Gamma's been continuously getting more positive as more bulls get interested in its constant upside move. It's still got like what 20. It's trading at 157. Gamma Max is at 162, so it's still about $11. 151. Yeah, about $11 a range up to Gamma Max. Charm's quite positive on it and has remained so. So yeah, everything there looks pretty good. Not a lot of puts. There aren't a lot of sold puts on it either, so maybe not very defensive upside, but it looks like the upside will probably just continue, at least for now. Meta. Meta's kind of in a similar position to Amazon, with the exception that adjusted dealer delta has been negative for quite some time. I think there's just like kind of big out of the money short positions on this that really haven't moved. They've just stayed there. I think the expectation is eventually they're going to miss on earnings, and the current guidance that's like priced in is going to cause a correction. But there is kind of a large out of the money short position that's sort of following this everywhere. I will say that bought call delta has been dropping off pretty steadily for a few weeks now. And moved negative last week and stayed there after Friday. So maybe like a little bearish skew, but I don't think that'll, like, Meta's again not super affected by its options chain, similar to Microsoft. So probably not enough interest there to make any difference. And then as long as people stay long the underlying, it'll probably stay pretty flat. If I had to watch a level on it for this week, it would be down around like 470. If it were to lose 470, it might start to see some more significant moves to the downside. But in its current range, very stable, choppy. Not a lot of upside room, so that could be an opportunity again for selling out of the money calls, or short strangles, or iron condors, or whatever neutral position you want to collect money on. But I would say that on Meta, I would be more careful because it tends to be exposed to any news about AI, and that can be pretty unpredictable. Microsoft, I'm not going to have a lot to say about this, to be honest. It's, again, not very exposed to its options chain. While it has some effect on price, it definitely doesn't dictate it. Microsoft, slight price improvement over the last few weeks. It has seen a bit of an uptick in call buying, as I think over the last few months, it's largely lagged behind, as far as continued growth. The other large AI companies like Nvidia and well, even Google's like performance over the last few weeks, Microsoft has kind of fallen behind, but it is picking up a little bit more call delta over the last 4 days. Gamma's been increasing slightly. Looks like those are shorter dated, maybe end of month. So, and Charm is positive. There's really no negative resistance anywhere near at the money, and Gamma Max is around 454. So it may just kind of continue its march up. This could be a good opportunity for selling something like like puts sub 400 look moderately safe. They might even be safe just out of the money. Um, but a little more management required. That's presuming that there's no negative price action in the indexes, which to which this is massively exposed. Next up, Netflix. I don't know if anything can really stop this from going up at this point, but it continues to find support above GN, which is now at 605.48. A little bit of gamma or delta fell off with the OPEX, but not very much. Most of that's recovered. Gamma is still positive. Short puts on it are still, I think, pretty close to their historic highest levels. Charm is still positive, and bot calls also is still positive. So it looks like continued slow grind up, unless it falls back below GN, which it doesn't look like it's going to do anytime soon. There's uh, pretty supportive positioning at 600 and a bit at 625. Starting to build up some short calls around 40 and 50. So also stable. Also doesn't look too bad. Nvidia. So closed a bit higher last week. Let me see if that's finally broken through or squeezed out some of that short call positioning. Delta hasn't really gotten back to where it was prior to the large OPEX expiry, but it does look kind of bullish right now. Delta neutral fell pretty far away from spot on Friday. That's usually a really bullish sign. A lot of out of the money call positioning coming in. I think Bull's feeling a little bit more confident on the continued break and close above that 900 level that it's been pinned to for so long. However, they have yet to buy a ton of at the money calls with that information. So not a lot of Delta just yet, and a pretty significant pile of short calls at 950 still present resistance to the upside. Gamma is still positive. Short puts are excessive, but have been falling off over the last week. So this one I would say slightly bullish, very bullish on a break of 950. If it continues to remain under 950 or is rejected on 950, the 890 level is very important as well. And I think that's... Oh, Tesla. Tesla's the last one. 1 second. So Tesla failed again Friday to break above delta neutral. Or gamma neutral. Sorry, gamma neutral. Although it did open right at the resistance, it ultimately failed it and recovered a bit into the end of the day. Call volume has slipped back to negative there, and the rejection off of DN I don't think is particularly good. Not only did it reject off of delta neutral, it also then failed to close the week above gamma neutral, which is probably not a very good sign. Gamma is negative going into this week, which means that initial hedging on it may be to the downside Monday morning. That could be offset by the negative charm that fell off the chain into the close last Friday, but it might not be. Bot call delta has fallen negative. Bot puts are starting to increase again after taking profit on the most recent low. So there's going to be a bit more put pressure here, which is going to make it harder to regain the GN/DN. But I would say that things here are probably still going to be pretty flat because there's not a significant amount of interest really on the call or put side picking up. So even though calls are falling off, puts aren't picking up a ton. And that could leave us, pretty stable between 160, 170, which are the kind of the closest big resistances. Um, yeah, not particularly interesting on that failure. Now, if we see put interest start to pick up, that would be very bearish because we are below all of the neutral levels. The market maker is a net seller. If we break to the upside of gamma neutral, which is now at 172.11, that's a little bit more bullish, and then a break of 179.67 at delta neutral would be very bullish. So far we're not anywhere near those though, so not a big concern. Nowhere near really a level where you could confirm anything. I would say on the technical side, I would be looking for a break of like 172.05, which is basically gamma neutral, to the upside, to play the upside, and a break of 168.38 to play the downside. It's kind of right in the middle of those two right now, so I'm probably not going to add any positions there anytime soon. And I think that's it. So we got about 9 minutes before I throw the quants on here. Did anybody have any questions? I would say the Mag 7 overall look pretty neutral to bullish, with the exception of Apple and Tesla, which don't look very good, but they do look stable. And then I would say Nvidia and AMD look the most bullish out of those. Everything else is pretty meh. Our 5DT SPX call debit spreads, still a good play. They're risky, but we'll go into that in a bit. They've been fine. I've picked up a few as a hedge most weeks. Usually they print. I have gotten stopped out of them more frequently over the last couple weeks than I was in the weeks before that. But I would say that if you're carrying any kind of downside positioning, they're almost essential to protecting your port. As far as playing them as a speculative position, I mean, I still think I still think like overnight straddles are much better than just purely having a call position. You can use debit spreads as like a pseudo straddle though. If you open one DTE for the following day, at the money, kind of like a bot butterfly, and then you close out the legs as they go in the money, that can be a way of doing it. Although the profitability is really way worse than an actual straddle. But it can be like good practice, limited loss. Any chance you've talked about GoEV? I haven't, because I'm not 70 years old. Reverse split seems to be squeezing some shorts. They have a tendency to do that. More stable above 4 than I'd expected, but also still a shit company. And liquidity will get back under control, inevitably, as it always does. And then those shorts will stop squeezing off, right? So, do you want to chase it? Or do you just own a bunch of bags and this is your first shot of getting out? Because besides the reverse split, not a lot changed. One to 23. They still have 50 million shares. And I'm sure they've not opened. Have they opened new options or no? One more stock, please. I just went through like 15 stocks. Those are all the ones that matter. Bought a bunch of low before the split. Are you up? I guess a little bit. Jesus, how low did it drop? I dig the vans. I don't have anything to say about Neo. There's nothing to say about it until China's economy stabilizes uh, in some way that breeds confidence, right? Otherwise, it'll just keep falling. It was like 8 cents pre-split. It's awful. Yeah, no idea how high it could go, but the fact that it didn't make a new high Friday is probably not a great sign. Although it will be difficult for the shorts until the options chain is corrected. Options post split options are open because once the post split options are open, that should probably give the shorts the liquidity they need to get out. Okay, yeah. So they've opened the options chain. Yeah, that should do it. Yeah, I see. So I'd be careful. I don't know. Maybe just set like a stop on the position. Lock in kind of the gap at least, and see where it goes. Or just scale out. I don't know how much you have, but I know you hate it. But any comments on Boeing? Uh, yeah, stop trying to go long on Boeing. That's a pretty good comment. Wall Street Bets is wrong. Even though people are still buying 737 Maxes and they have no choice, that doesn't mean that their stock is going, like, the stock price is going to perform well. And we haven't even begun to get into like the end of this investigation, nor the fees that are going to be levied against Boeing in the future, not to mention lawsuits, right? This could be like a drawn out thing, like 10, 20 years. We talked about DVN. Do you think there'll be a pullback before it continues upward? I hope not. There's plenty of time to buy it. I mean, it's still not even outside of like my target range for buying it. It's only at $48. Are you gonna get it at 42 again? I mean, probably not. Oil prices are high as fuck, and nat gas is moving up too, to which DVN is also exposed. I was thinking about CS. Oh, you want to own more of that bag of shit? You know that they don't have like a future as a company, right? Like the reverse split's squeezing off some shorts. That's mechanical, but that didn't change any of the fundamental value, which is zero. I wouldn't bet that it could hold those prices. Don't forget, with a smaller float, it's going to be more illiquid. So faster ups, faster downs. All right. I saw that you're not going long Boeing, Red Ranger, even though you retracted it. But DVN looks good. Yeah. How's Henry? Hold on, let me check Henry Hub. I know I looked at it Friday, but yeah, I mean, I think Nat Gas is probably finding a low here. This is gonna be a little China dependent too, though. Yeah, I mean, even if the Nat Gas weighs on the price action, I still think the price of oil being up is gonna have a positive benefit for DVN. They have contracts with Amazon, Walmart, USPS. I think people will be into their vans off hype from VE Buzz, which they won't be able to get. They have to fulfill those contracts with Amazon, Walmart, and USPS. Otherwise, those contracts turn into liabilities because then they will have failed to deliver. So that's the problem with GoEV right now, is that there's a lot of I mean, there's a lot of speculation, but I don't think it's that far off that they're not going to meet the demands of those contracts, which would almost instantaneously make them insolvent. So big risk, big risk. I want to put a lot of money into it, but it could be fun. All right, let me see what JFresh and Dork are up to.
So I put it in my butt, and once it was in my butt, I noticed that my headache went away. But if I left it in my butt for too long, then the headache came back. So it's leaving it in your butt for just the right amount of time. Uh, and that seemed to fix it. But this I guess this is what happens when you use public bathrooms, huh?
Yeah, yeah.
Oh, hey, Girk.
What's up?
Oh, you know.
Nothing.
Glad to hear your butt's doing okay. Have you tried ibuprofen in advance, knowing that the headache's coming?
It's not a good idea to put ibuprofen in your butt.
Mm.
How do you know that?
Anyway,
What's up? How you guys doing? Are you
not
back?
much.
Are you back home now, Jay Fresh?
I am. I am back home.
Nice.
I was in New Orleans for about 42 hours.
How was it? Did you? I mean, I know you drink a lot of wine.
I did. I did drink a lot of wine. I liked that.
Are
I didn't
the
have
New Orleans grapes better than the Texas grapes?
no. Didn't drink New Orleans wine. Gross. I had somewhat decent food.
All right. Did you eat any gator tail?
No, I've had alligator before. It tastes like dried chicken. Whatever. I didn't have a po' boy because I don't like their bread in New Orleans. Their bread is awful.
It's because their water's got too much oil in it. Thanks, BP.
I heard the oil is good for your skin, though.
Maybe. I wonder if we could do a study. Like, can we fund a study on the quality, like the negative skin conditions and bread?
Mm.
There's somebody who's done that.
Because all that
Maybe.
petroleum in the water supply has got to be great for your skin. Just supple, you know.
Oh yeah. Well, it also functions as like a sunscreen, right?
Ooh, we could look up incidences of skin cancer too.
I mean, wouldn't they like? I have to imagine they would extract all of the oil from the water before they put it in the system.
Yeah,
Yeah,
all of it.
like I mean, functionally all of it. Obviously, nobody's getting rid of everything, so we all have microplastics in our bodies. But
Do you think the benzene might make it through?
benzene's volatile. You just wait a while and it'll go away.
Or you just light it on fire. I heard that's really good.
Yeah. If your water is catching on fire, there's something wrong with your water. I'll give you that.
Nothing like some benzene in the water.
I don't know how effective New Orleans water treatment is, but
I know.
I'll give
I know
you the
literally
benefit of the
nothing about
drought.
it. I know nothing about it because that's just not the world I live in. But water and oil are pretty easy to separate because they're different densities.
True. I was thinking more about the volatile compounds that come alongside pure crude.
Yeah, those you can just bleed off, right? They outgas pretty quick.
It's true.
Some of them do.
Yeah, I guess as long as you're aerating the water sufficiently before
It's
putting
like
it into the public water supply.
it's like cooking vodka in pasta sauce and then feeding it to children, right? I mean, all volatile stuff is burned off pretty quick.
Yeah. I don't know. I'm just like, it's stuck in my head, the geography of New Orleans and everything just being under sea level. I assume that the polluted seawater has just contaminated everything.
Yeah, I think probably the rat piss is more problematic than the oil. I saw a not insignificant number of rats walking around the city.
Speaking of rat droppings, did you try any beignets?
I did. I didn't go to Cafe du Monde, but the place we ate dinner one night had beignets. They were good. They were fried donut shaped like a really big pizza roll covered in powdered sugar.
Yep.
It's a funnel. It's a funnel cake, right?
Yep,
I mean,
it is. It's a big, thick funnel cake, like a pillow.
Yeah, a pillow for rats. They can eat it and sleep on it.
Yeah, the rat problem there is well known.
Have we lost enough people yet?
I don't think we've lost anyone, unfortunately.
You want to talk about my pool for a second?
Nope, more people have joined. Yeah, we could talk about what's going on with your pool. Is it are you opening it back up now?
It's just about open, so it's all cleaned up and everything. But the thing in spring. I don't know if you guys like ever think about like trees and shit this way, but I think trees are degenerate and disgusting, just like sexual predators.
Like I have allergies, so when they pollinate, I feel like they're trying to sexually assault me.
Yeah, when they're giving you their money shot in your nose
and face, eyes.
Well, they now imagine you have a really big pool that like captures and collects all that, and there's just like a 3-week period where every single tree in like 100-yard radius is just jizzing into my pool.
Yep. Yeah.
Have you ever seen really annoying?
Have you ever seen like one of the big pine trees when it's all like backed up, get hit by a strong wind, and the yellow semen just blows off of it in like a thick cloud?
Yeah.
It scares me.
So anyway, all that's pretty much, gone through the system and cleaned up. So we're pretty close to opening.
Cool. Which makes me question why you ever closed it in the first place. I have some pool news also. I finally found a contractor willing to fix my pool. he said not a big deal at all. He's gonna replace the liner and re-pour the concrete. And then I guess I need a new pump because the pump I have is from 1978.
Oh yeah, probably doesn't meet code anymore.
Yeah. Well, he said it's just like it's not pushing through as much water as you would want to see. Um, but he was pretty straight up, and he only wants to
How big?
charge me
How big's
like 12,000 for the whole job, which is way cheaper than everyone else.
that? That's actually like suspiciously low.
It's kind of low, right? But he said the crack's not as bad as I think it is, and he just needs to resurface the concrete and not like break it all
Okay.
out and replace it.
And the liner is plaster. What's the liner?
I don't know. Plastic,
Alright.
maybe?
Ew.
I don't
Can
know
you
what
get
it
that
is. It
changed?
might be plaster.
What is it? Is it just like white
I can't see it.
because of all the shrimp?
I think it might just be plaster. It's they just put it in there with like buckets and like
Yeah,
it's like spackle.
and they smear it around. And they wear
Yeah,
those like really spiky shoes so they can walk around.
I don't know. I haven't seen them
Yeah,
walking yet, but
they
he
wear spiky shoes.
he's got some very good references from other pool owners that I
Tell
checked.
me tell me more about the pump, the existing pump. How big is it? How
Uh,
many horsepowers?
it's like 3 or something.
Three should be enough for your pool. Mine's
Um,
2.7.
oh, okay. Well, it's like 3, but it's from like the 70s. It's super fucking old, and it's not energy efficient at all.
Yeah, so
Um,
make sure that I think you have to now. Like all pumps have to have variable speed drives, but definitely get the variable speed drive.
oh, okay,
You'll
I
save
will.
so much money.
Well, he's gonna go with me this weekend and pick out a pump and a like saltwater chlorine system, and then he's gonna install those.
You go in salt.
Huh?
You go in salt.
Yeah, that makes sense, right? Then I don't have to fuck with it.
Well, you still have to fuck with it some, but you don't have to fuck with it as much.
Well, he's gonna do all the service shit after it's opened for like 200 a month. So like the chemicals and all of that, I don't have to worry about it.
Good. Keep him around when his job starts to fall apart, and you can give him shit for it.
Yeah.
Smart. All right, how many have we lost?
We're flat. Nope, we're up.
All
We've gained 2 pool
right,
aficionados.
Dork, talk about your move. Everybody
So
loves hearing about moving.
doing
Oh, yep.
great. I made pasta last night.
Yeah, we
No,
saw
don't talk
that.
about that. People love food. Talk about the move.
Oh, the move? Oh, well, I moved a lot of boxes, and we actually just moved all our groceries from the old fridge to the new fridge last night.
Ugh, poor people.
I know, right? Yeah, we didn't just replace everything. We did move the groceries, but that went smoothly. No bottles broke. None of the eggs broke. Our milk was bad, so we had to throw that out. But sometimes things get caught in the collateral damage. Yeah, no, it.
Wait, was your milk bad before you moved it, or did it go bad during the move?
I mean, the move itself was about 20 minutes, and we were at the other place, and I was like, before we put this in a box, let's just smell it, and it didn't smell like normal milk anymore. And
This
so,
is a completely foreign world to me. My house goes through 3 fucking gallons of milk every week.
I go through a gallon of milk every week on my own, just by myself.
Like those people at the grocery store who are like looking to try to find the gallon of milk that has the longest expiration date on it.
Yeah, that's you.
No, that's
No.
that's not me.
You're just buying the one on the front of the rack.
Yeah, because it's going to be gone in 2 days.
I found that if you buy your milk at Costco, their expiration's like 2 weeks longer than the grocery store.
They probably ultra pasteurize it or something.
I don't think so. It doesn't
Oh,
taste.
you
It
think
doesn't have
they're
that weird fucking like boxed milk flavor.
yeah, you think they're You think their logistics are just that much better that they get it to the store that much sooner?
I mean, I kind of do. Yeah. If there's one thing that
Maybe.
Costco is amazing at, it's logistics, right?
Yeah.
Which also makes it really hard to be like a vendor with them because if you can't keep up, they just drop you like a fucking bad habit.
Yeah, we've had a couple Costco vendor folks or Costco employees in the Discord that talk about that. It's kind of fun. I remember they were talking about like back in like when eggs were super expensive, they were just like really whipping around the suppliers on eggs.
Oh, I'm doing one other big repair to the house that we could talk about. That might get rid of some people. So currently, the house is oil heated, and I hate it.
Ew.
Yeah, it's the
What
worst.
oil?
Oil, like
Not
fuel.
natural gas, like
Nope, it's got
oil.
three 250-gallon oil tanks that are buried next to the basement. And this is next to the beach, by the way. So if there's ever like a leak, I'm gonna get fucked right in the ass by the EPA. But no, it's just three giant oil tanks, and they come out with a truck. And they fill those up in the winter, and then by the spring they're empty because I have to keep the heat on like a little bit so the pipes don't freeze, and I don't want
So
to winterize
you're
the
like an
house.
actual just gas. You just have a gas station buried in your backyard.
Pretty much, yeah. So I'm getting them removed, and then I'm going to pay the utility company $50,000 to pipe in like natural gas 120 feet to the house. But here's the most expensive thing is going to be redoing all of the propane lines in the house and converting them over to nat gas. And then I have to buy a new stove because the stove I have is for propane. And it's like a La Cornu, which is,
Wait. They make stoves for propane?
yeah,
How did I not ever know this?
well, they do. And it's super bullshit. But anyway, it's a La Cornu, and the stove is like 40 grand. And so I've got to replace this fucking stove and hope I can sell the one I currently have to some other fucking trog who has propane uh, cooking gas, which I assume only exists in trailer parks and they're not buying $40,000 stoves. Um, yeah, so it's going to cost me more money to replace the propane lines and the LN like than it is to pipe the LNG into the house, and then I have to replace the furnace.
That seems like a pretty trivial replacement at that point.
Yeah, the furnace actually isn't that bad. It's just like it's like a few grand. Um,
Yeah.
but I could keep
That's fascinating.
everything.
So at what point will you have put more money into the house than you bought it for?
I'm still way below that
Okay.
because I gave him a $300,000 loan, and I think everything's said and done. I'm gonna have them come in and paint shit and refinish the floors. The roof is brand new, so I don't have to worry about that. All of the drywall was done in like uh I think it was like 2004 or something, so that's not that bad. I'm not gonna like really remodel the kitchen or anything anytime soon, aside from changing the stove out. So I think I'll be out like another 150, but it should like a lot of that stuff will probably be like the pool functioning and having nat gas will probably largely be reflected in the value of the house down the
Yeah.
road if I go to sell it.
If for whatever reason I was ever looking in that area, because I imagine that's if your house is like that, a lot of other houses are still like that too.
There's a few around there. I think it's because they were like by the beach, so there was no way to like. I think that neighborhood that I'm in started off as like beach shacks, like little like shacks by the beach, and then like those got bought up and turned into like McMansions. Um, no, I didn't move. I'm still in the city, but this is I have a house out in Long Island. And so like there's still some beach shacks in the like other neighborhoods, and those are all those all don't have like nat gas heat and all of that. So I think it's pretty common once you get that far out on Long Island.
There you go.
Let's see if that.
All right.
Let's see if that.
Is it just us now?
That did. Ooh, yeah, we lost like 14 people there.
Nice.
That was worth it. Perfect. Should we brag about interest rates or something? We could probably get this under 200. Well, let's talk about how we're all homeowners. That we're part of the landed gentry.
No, yeah.
Although I don't know, yeah, maybe we shouldn't talk about it around Dork.
Yeah, that's awkward.
Give me a couple of years, Jay Fresh, and then you can ask me how I'm doing.
Oh, I don't think you're doing badly. I just think that I feel like it's in poor taste for me to brag about my 2.875% mortgage in front of a new homeowner.
Well, so basically, it's funny. We're like the like tiered, right? So I got my house at a 5.85% rate. You got yours at a 3% rate. Gert got his basically
2.875. Don't round it up, please.
0. I don't have a mortgage.
Got his house for free.
Yeah, it's expensive being poor.
The inflation goes right to my sales price.
We laugh, but it's true. No, I mean, even my house, I mean, just the houses around me that have slowly been starting to sell for various reasons, the prices are insane. Insane.
Yeah, I actually looked at like real estate in, I think it was like just outside of like north of Houston, like some nice neighborhoods around there. The fucking houses are ridiculous. I don't know who would ever pay that much money to live in Texas. It's like fucking $750,000 for like a 4-bedroom.
I have a 4-bed, 3-bath, about 2,900 square feet on a third of an acre, and it's with a pool. And I could probably sell it for over $750,000.
Good lord!
You should just sell it and move to where Dork lives, and then you'll have an extra $250,000.
Yeah, but then I'd have to live in Reno.
Yeah, that's true.
Or even worse, you'd have to live near me. It'd be like, dude, if we lived near each other, it would be just like being little kids again. I'd be like knocking on the door, your wife would answer, be like, "Is Jay Fish around?"
Dork could have all his white papers with him.
And then when you go home, my wife. And then when you go home, my wife's like, "Jay Fresh, I don't like your dork friend. He smells like weed. I don't think he's a good influence on you."
Poppycock.
All right. So, I have a bunch of charts that we can run through. If you guys want me to start off all the charts.
Please do, because I was just talking with Dork. I was like, man, this market's getting really boring. It's the same thing every week. It's like the bulls get more bull, the bears disappear even more. The market continues to get ever more lopsided. Price goes up. Nothing changes forever and ever. Amen.
This is the way. I mean, I don't know what you expect to happen, but that's generally how it goes.
Yeah.
All right. So, first thing, this is U.S. household financial assets allocation. And the equity is stock equity, if anybody was wondering. It's now even higher than it was a few weeks ago, at 48%, which is roughly where U.S. household equity ownership was at during the dot-com bubble. So everybody's loaded up. Everybody that's going to buy stocks has bought them, and they own them. And so everyone's standing fully on the rug, which I thought is fun. right? Like they're the most on the rug they've been since the dot-com bubble. We've got this, which is largest inflows into gold since May of 2023. So we're getting, and this is, just so you guys know, the largest buyers of gold are central banks. So we're seeing increased perception among central banks of currency risk. And we'll get more into the whys of that in a little bit. But something to note at the very least. Asset managers and leveraged funds are now at their lowest allocation on futures in the last 6 months. So while retail's been buying everything they feasibly can in their mutual funds and 401ks and private stock accounts, asset managers and leveraged funds are selling everything they can. And this is the first time we've dropped to a level this low since the big run up in November. Yeah. Inflation expectations. So PMIs are showing continued inflationary pressure both in manufacturing input price, service input price, and manufacturing output price and service prices charged. So just everything up, basically. Inflationary pressures across the board in both services and manufacturing are rising. We have now broken the record for the US to 10-year inversion. This is the longest period of time that the yield curve has remained inverted without a recession, finally surpassing August of 1978. And we're just setting new records every day now. However, SPX up sessions continue to show increased volatility. This is a 1 month look back. Average down sessions are showing reduced volatility. So average move down 42 BPS over the last month. Average move up 70 BPS. And then I guess we could start. I have some more charts for like the Fed and stuff, but I guess we don't really need to go into those. Asset allocation. The fund manager survey shows that fund managers are the most overweight at 28% overweight equities that they have been since February of 2021. That's based on a 60-30-10 basket. I believe 60 equity, 30 bond, 10 other. I'm not sure what they're factoring as the 10 there. And macro indicators, we've got divergence in beta and volatility and divergence in the US dollar and S&P price. However, we have convergence in cyclical versus defensive, advanced decline, high yield bonds and treasury bonds, and we are neutral on discretionary versus staples. And I've got some more stuff for the Fed when we get into how badly they fucked up, but I'll go into that later. So let's talk.
I mean, this is just a continuation of just kind of what we've been saying for a while now. Is that everything about this current environment is off the charts in terms of probabilities and the extreme, I guess, the extremeness of it. Anybody who claims they could have predicted the extent to which this occurred, I think, is probably lying, because statistically, nobody would predict this to happen.
Yeah, I don't think anybody would ever assume that we were going to end up here, but here we are, and the Fed has chosen once again to not make a decision, instead of, rather than attempt to regain any of their efficacy in controlling markets. which I mean, one could argue never existed in the first place. But you know, no rate increase, but no announcement of rate cuts. I don't know. I mean, maybe they're leaning on Bank of Japan, but it looks like to me, and I made a pretty long Twitter post about this after the decision, but um, they I think they've really failed in their dual mandate, and I think maybe that we're moving towards accepting a higher rate of inflation, right?
I mean,
Because I don't see what other options there.
you look at the dot plot. I don't think they even expect us to be under 2% or at 2% for the next 3 years. I mean, that's de facto. I mean, if you think about like the cycle over which these decisions are made, that's pretty much just saying that the rate's higher.
Yeah, and I mean, they've projected a higher rate. Like, so here I have the FOMC implied rate path, and it compares the December versus March median paths, and you know we're slightly up. Like we have a slightly higher rate path, right, which should push row up in the options market or expectations for row, which I'm kind of wondering is why we got the big upside blow off. Was MM's hedging that increased interest rate risk over the next 2 years, right? Because we haven't really seen any interest in calls on top of that, like
Yeah.
initial move up. It seems like no one's coming in to buy the out of the money calls. No one's coming in to sell the vol. So the confidence from at least equity speculators is not where it was 2 months ago. But at the same time, I don't think the
But
Fed's moved their expectations up nearly enough, right?
yeah, I mean, I don't know. A lot of people were confused when I posted the dot plot and said the 2% target seems to be dead. But I mean, if you look at that, would you say that that's a, you know,
I mean,
uh,
it looks like they're targeting 2.33 by the end of
yeah, and this is obviously this is the
2027.
rate. This is the rate, and they would expect inflation to be under that. But if we're not even expecting the path that they want to take doesn't even meaningfully get us down to like a 2% rate for at least 2 more years, right?
Yeah.
To me, that seems after we've already had a rate above 2% for like 3 years. So we're talking about like a 5+ year period where the Fed has allowed the interest rate to be significantly above 2%, right? That
Yeah.
to me, that seems like a de facto uh, just removal of the 2% target.
I mean, I kind of agree. My biggest problem is we're not even, as of right now, over, like, if you look at like 6 months annualized, we're not even at a restrictive rate. Like, we're not even neutral, right? We're at like 1.38%, right? Roughly, which is fucking terrible.
Yeah.
And
No, I
provide,
think
well,
most people agree.
if you use if you use like super core, I mean, if you do it off of core, just core PCE, then it's a little bit better, like 2.1, but still not restrictive, right? So I mean, inflation's already pushed up enough that the Fed fund rate isn't doing anything, even with the lags, right? It's gonna allow inflation to expand more due to the lagging effect of monetary policy into the future currently. So
Yeah, and I think couple that with the fiscal, which people don't like to talk about. Everybody assumes after 2008 that, oh, the government spending money doesn't cause inflation and never will. And so here we are, and everybody's ignoring, this fiscal giant in the room. They just passed, a $1.2 trillion budget through October, I think, which would be the fiscal year.
yep,
But that's on top of the spending they already have done from last October to now, and that doesn't include discretionary spending on or non-discretionary on Social Security, Medicare, Medicaid. So we're talking about like a deficit potentially of well over $2 trillion this year.
I mean, I think our national debt grew by 167 billion last month.
Yeah, and I think a lot of that, because a lot of that was intergovernmental, which means like pensions and stuff like that, stuff that the government owes itself. But still, right? I mean, it still has to eventually pay it. But yeah, it's still going up at quite the clip.
Yeah,
I think
it
we've
is. I mean,
it's
what I'm really wondering here is like, our generalized assumption is going to be that bulls come in and push this higher because they're allowed the financial flexibility to do so, right? Like financial conditions ease on the Fed statements, and that allows leverage to go up. But we're not seeing that, and I'm wondering like, if we're reaching the point now where the market tries to take the risk into its own hands, right? No one's coming in to backstop that risk, right? And um I mean, eventually the tail risk is so outlandish that somebody is going to be like, okay, fuck this, I need to hedge this shit because it's all gonna come tumbling down, right? um
Yeah, but the flip side of that, so the flip side of that is, if you believe there's a significant chance that the Fed is not going to get inflation under control and will eventually just give in to fiscal dominance, then going ultra super mega FOMO ape long into equities is a hedge.
okay, so it is if you think the dollar is going to decline. And see, that's what we're not seeing. So we're seeing the demand in UST, and part of this is okay. So I've avoided talking about it all day, but I'll talk about it now. So China's goal, like the PBOC's goal, is to keep the yuan pinned at 720 to the dollar. Right, that's the exchange rate. 720 yuan, $1. Right. Over the last week and even more so, so they decided not to change their midterm rate on their or the rate on their midterm lending facility, and that started to spark more fears that they're not really at the stage of financial recovery that everyone expects, despite them having very good industrial output numbers, and slightly worse retail sales and higher unemployment. But like the manufacturing side was starting to look good there for a minute. But the fact that they're not cutting back those rates means is kind of signaling that they're not ready for a recovery. And then we had the Bank of Japan decision and the FOMC decision this week, and that has caused the yuan to plummet against the dollar. It's now at an exchange of like 7.27. And this is pushing China into heavily buying USTs, and they've been buying them pretty excessively for like the last 3 months, as it's been harder and harder to maintain that locked in exchange rate. But now it's kind of going nuts. Like we saw really big moves in UST on Friday, but at the same time we've got Fed fund futures trying to price in 3 rate cuts, and we've got the dollar trying to price in inflation expectations, which are skyrocketing, right? And so you've got all these breaks in correlations that normally exist, and everything's kind of going its own way because there's so many different markets trying to price in so many like uncorrelated events, right?
Competing outcomes.
Yeah. And so we're getting like a lot of FX volatility. So I don't know if I got to explain this to you, but the change in the Japan's policy forces anybody short the yen to long the JGBs because they have to pin the effective rate of the Bank of Japan to 0%, right? And in order to do
Yep.
that, you have to. So it basically foists the YCC control off onto the market participants instead of the Bank of Japan backing the YCC. And the Bank of Japan's taking all the money that they would normally intervene in the FX markets with, and they're pumping it into JGBs also, right? Because now they're not doing YCC anymore, so now they're going to be buyers of Japanese bonds. And so by doing that, you're driving the yields down, right? And that's going to drive yen down, and then driving yen down is driving dollar up, and driving dollar up is forcing China to come in and buy USTs, which should be driving the dollar down, but they're not buying them at a fast enough rate to stop the increase in the dollar. And so they have to keep buying more because the yuan is falling further and further behind. Um, and at the same time, U.S. speculators are trying to price in higher. They're trying to get higher rates because they assume that we're going to be stuck in this higher inflationary period for longer, and there's less confidence in buying USTs because they're not priced relative to the rate of increase in inflation, right? So you've got China buying a lot of undesirable USTs in order to prop up their currency, which is driving the dollar well above where it should be. And now remember that all of those bank losses are denominated in dollars as well, right? They're not just yields, right? Like we use the yields in that 1DD I kind of wrote up in that paper that I was referencing as like kind of a terminal rate for where those losses are most exposed. But if the dollar goes up, those losses are also compounded, right? Because the value of those treasuries is the dollar at that point in time and relative to the yield on those treasuries, right? And if that's massively behind the curve, like the forward rate of inflation, those losses start to become more and more exposed. So as the dollar goes up, it kind of has the same effect as if the 10-year was going up on those like fair value losses the banks could experience. So if China keeps pushing the dollar higher inadvertently, and everybody needs to keep staying in the carry trade, we might start to get more bank failures again. And we already see the fear is really obvious in central banks because they're buying as much gold as they can get their fucking hands on, right? And so we're looking at not one or two, but three of the world's four largest economies, currencies spiraling.
It seems fine.
Yeah, yeah. So 5,400 next week, right?
Probably.
I don't know. What do
No, we
you
could
what do
talk.
you
We
think,
could.
Doric?
I mean, I don't know. It, it seems to me like the cost of money, right, just in general, it is starting to. I think that the demand, I think just for like liquidity, is just starting to go up, right? Just more broadly speaking, you have Bank of Japan, you know, raising their interest rates, and this puts pressure on carry
You're
traders,
very
people
quiet.
having
Hold on.
fees.
No, it's him. It's not
Yeah,
you.
I'm just trying to turn him up a little.
Yeah. Carl mentions it. I don't know why I'm so quiet in this new room. Like nothing else changed. Maybe I just suck.
Just
But
get right on top of the mic like this.
okay, how do I sound now? Am I better?
Much better.
No, you sound the same.
It does kind of sound the same.
Fucking goddamn shit. I could plug in another mic later, but to me it just seems like the demand for liquidity is going up just globally. I mean, except in different ways, right? We have yields going down, dollar going up, right? We
Yeah.
have yields going up in Japan because obvious reasons, right? And we have yen going down, right? In Europe, I haven't looked at the bundas or anything like that, but the euro dropped what, like 90 bips over the past 2 days,
Mm-hmm.
right? So there's this unusual demand for dollar collateral, I guess you would call it, right? And that's interesting to me.
I mean, I think
Um,
so much so that any idea of like a BRICS currency is now officially dead in the water.
I mean, I think it always was, right?
Well, I mean, China was always the backstop to that, right? Like they've been shedding U.S. treasuries. Not anymore.
well, I mean, yeah, the quality of dollar collateral, right? Because we do have such a hegemony, means that if you don't have it, right, you're basically imparting an implicit cost in the supply of money, whatever the fuck it is you're using, right?
Yeah.
Because you no longer have the ability to convert it to dollars and efficiently reconvert it to whatever currency you need. Um, so, say with China, right,
Mm-hmm.
and them having to, get dollars, right? It's
Desperately.
sort of desperately, right? But
Yeah.
that's sort of the other side of the carry trade, right? Is what China is doing.
Yeah, it is.
I mean, I kind of see it as just a continuation of something that's been happening, since the inflation issues cropped up. Is that us having substantially the highest rate right now allows us to export our inflation to these other economies, and they're
Yeah,
trying
so
to fight back.
they're trying to push that inflation back onto us.
But it's exceedingly difficult because our rates are so high.
Well, the
Yeah.
thing is
You're
when the
not
value
wrong
So
of
with
gold
that.
goes
so
up,
if we lower our rates, we're just giving the world a bigger lever to push the inflation back onto us.
and yet dollars going up.
Yeah.
That's the crazy part, right? Like that's kind of the weird thing about what's happening right now. Like financial conditions like didn't necessarily materially loosen except in the fact that that yields went down, right? But the appreciation of the dollar means that if you are doing some sort of currency arbitrage, right, unless that's not the carry trade, right, if you are paying dollar denominated debt, right, from another currency, the cost of servicing that debt just went up, and materially so. And that part is interesting to me. And I think that's why we saw the euro in particular drop so hard relative to the dollar on the move up. I have a feeling that uh, I'm not quite sure how to put this. And not that it's like some sort of crazy doomer thing, but
It's just very convoluted.
it is. It's just it's super weird trying to figure out how the tides are shifting, but they're certainly shifting. They just like moved laterally, not really up or down or left, anything like that. They just did like a really gnarly sidestep, and I'm not sure if it's done yet.
I mean, I
I'd
think we
much
can
rather
like
watch.
kind of draw it out, right? We've got the US where we have increased inflation expectations, right? And we have but at the same time we have decreased forward rate expectations. And
Right.
this is a whole bag of shit by itself, right?
Yeah.
These are very conflicting. In China,
Yeah.
we have rapid currency devaluation.
AKA inflation.
Yeah. Well, not realized yet, right? But it, yes.
Yeah.
Um, and then we have like a weak, like they have a weak nominal rate, right? And then in Japan we have a zero rate, but increased inflation expectations.
Yeah, also currency devaluation.
Yeah, and currency devaluation. I should probably put currency.
Yeah, none of these things taken all together make much sense.
Yeah, right? I mean, they're all directly conflicting, but the three of them together is causing quite a lot of turmoil in the FX markets, which are huge. I don't think anybody, like, far beyond um far beyond bonds and equities, FX markets are gigantic, and they're not centralized either, which makes them prone to even more volatility. So this kind of trifecta of fucked up economic scenarios is creating a bit of a problem right now. And I know Friday some of you guys got warnings from your brokers about the FX volatility, and probably some increased margin requirement expectations and stuff. This is I don't see anything to come in and stop this. Um, I mean, unless somebody makes an emergency monetary policy decision. And I'm not sure what decision could be made here that would be beneficial. Maybe China lowering rates, but that would be giving up a huge chunk of their like long-term GDP potential, because they're currently not in a situation where they can afford to lower rates, right? And that'll mean taking on even more inflation, which could devalue their currency even more rapidly.
I mean, this is kind of the thing that we've all, over the past 15 years plus, have just sort of said can never happen, is happening, right? I mean, we've made so much money that the and we've tried to prevent that money from circulating through and debasing itself, but it's eventually just going to happen, right? I mean, you increase the supply of something by that much, eventually the market must equilibrate to that new supply, and we're currently fighting that dynamic, and the only way to stop it or reverse it is to stop making so much money, which is to stop creating so much debt, and that's not something the world is ready to do in any capacity.
Well, if we stop creating debt, then China's fucked, right? Um, because they need to buy it in order to create a general equilibrium between the yuan and the dollar.
When I say stop creating debt, I don't
I
mean like
know, I
stop
know.
cold turkey. I mean adjust the rate at which our deficits are increasing, right? At least have our deficits increase slower than GDP, for God's sake.
Well, yeah, that would
Uh,
probably be
I mean,
ideal.
yeah. I mean, I regard a sovereign nation as a going concern. You don't stop investing in a going concern. If you expect to continue growing, you lever debt to finance that growth. I mean, that's just good business. But I mean, that that debt has to be utilized in a good way, right? And yeah, I mean, we're pumping a lot of it into, the CHIPS Act. We're trying to onshore manufacturing, but that seems to be, I mean, you have Intel asking for another, what it was like another $8 billion to actually go forward and build more chip plants here. We all know chip making to me was probably one of the riskiest things they could do because it's so much an art, right? There's a reason that there's only one company in the world that's making the extreme UV lithography systems that, make the chips at the one company that can make the 3 nanometer process, which is TSMC. It's a dark art, and it's hard to, you can't just transport that from one part of the world to the other and expect, even if you buy all the same equipment and set it up all the same way, you cannot expect the same results. It will take a very long time. So coming back to my point is, if you're not making good investments, that debt can end up harming you. And then, not to mention, most of our debt is just, Ponzi, right? We just got to pay ourselves more than we put in. So yeah, it's hard, but I think we just have too much currency. There's just too much.
Yeah, I mean, I agree, but I think this particular spiral is going to get worse the more money we print, right? Because China's going to turn up and provide the liquidity for those auctions, which should force the tails down, right? And that's going to drive rates down, but the Fed funds rate staying the same. So that'll just keep driving dollar higher and higher, like almost like a dollar, like a really soft dollar squeeze.
Yeah, I mean, this is just it's a global battle for who's going to eat the inflation sandwich, right? I mean, I've talked before about it just being between workers, businesses, and government on eating it, but there's this other dynamic I don't think I fully appreciated before, which is, other sovereign governments, like which government is going to eat it, which economy is going to eat it, right? And so we're all trying to dump our inflation on other countries because none of us are willing to stop spending money.
Yeah.
Yep.
Yeah. I mean,
Well,
Japan's kind of stopped spending money, and they're the ones that triggered. Well, they're the catalyst for all of this, right? Because they rapidly created demand in their bond market, and nobody was really prepared for that outcome. I mean, like we discussed what would happen at a zero rate before they went to it, but I don't think a lot of people planned on that or really thought it through on that level, because it would appear that markets are shocked by the news, and so that obviously everybody running into JGB's full speed was not priced in,
Yeah,
which is weird because you'd think that would be the
and
first thing at the forefront of people's mind, but maybe we're wrong. We're just
and
that awesome.
I'm certainly not, an expert by any means on any of this. I'm just going from my own intuition about, balances between flow between multiple things. But to me, Japan finally raising rates is it's a big red flag to me because that's saying that, hey, this place where we have been able to dump effectively all of our inflation for the last like 30 years, among other places, we've now filled it up and it has no more capacity for inflation.
Yeah.
And once every country's full and there's no more capacity to consume inflation, where does it go?
Well, apparently right into the dollar. Right? I mean, that's what we're
Yeah,
seeing.
but they're going to respond, right? I mean, the markets are going to, the other countries are going to have to respond.
I mean, they're responding by buying treasuries, by buying the UST. I mean, I'm sure the European Union, I'm sure Great Britain. I know Switzerland's immediate response was to cut rates. Bank of Mexico cut rates. Bank of Colombia, although not very relevant, cut rates. Right? They're all trying to fight back against this, but how? Right? I mean, you're talking. I mean, the battle exists here, right, between China, Japan, and the U.S. No one else is. I mean, maybe the EU, but no one else is really
Yeah.
prepared to do shit about this besides these three countries, right? And the EU's, I mean, they're mostly fine because they have the euro dollar, right? And so that protects them to a great degree in this kind of event. But uh, China and Japan are definitely like, I mean, this is basically like economic war between the two of them. And China's not in a position really to fight back against any of it. So I mean a lot of this is gonna hit China hard.
Yeah, this is depressing.
Like the yuan, I mean, if the yuan keeps going like this, it's gonna collapse.
Well, they
And
printed a
then and
lot of
then
them.
and then Bank of Japan, I mean, the reason they went to the zero rate, right, and the reason they're probably going to go to a positive rate next month is because they don't have a choice, right? They're scaling back their like their household utility coverage that they've been giving out money to everybody to cover the costs of energy, and so all that energy inflation is going to come home to roost on like the Japanese consumer over the next like 6 months, right? That energy inflation now higher, and then additionally, you know, any other inflation, their inflation, their most recent inflation report already came in uh, up quite a bit. I think core was up 0.2 month over month, higher than the prior period. And so they're already kind of forecasting that they're going to eat that inflation shit sandwich, which is bad for them because they're a large importer.
Yeah, we're running out of places to stuff all the debt.
Yeah. Yeah. Give me 1 second. I'll be right back. You guys can discuss.
Or,
Uh,
what are your thoughts on all this? You've been a little quiet. You're tired from your move.
yeah, I'm just listening and kind of working on some other stuff at the same time. But
I knew it. I knew you were working. You're not here. You're not present.
I'm sorry. Are you going to put me on a performance improvement plan?
Do you get this? Do you get this from your girlfriend that you're not present?
No.
Because it seems like something that you would get a lot. Is she not present? Are you guys like perfectly not present?
Our presence is perfectly aligned, okay?
Nice. That's hard to
But
do.
yeah, I know, right? No, I kind of hit the jackpot with her because she does not mind at all. She usually just falls asleep on the couch though, so I can do whatever.
All right.
But I mean, the weirdest thing about this whole thing, right, is that nobody gives a shit.
Why? Number go up, dude.
I like literally like it's just like no one even has any sort of capacity left in the remaining synapse in their brains to consider tail risks, right? Like when you address a tail risk in front of the broader market, it just says lol, hold my beer, I don't give a fuck.
Well, okay. I think this is natural human behavior. We have fear exhaustion. Um, so if you look at like World War II when they were bombing London, like you can imagine that just like you could walk outside any given day and like there's a chance that just a bomb will blow you up, right? And you would imagine that like people would be all hunkered down and they did that for a little while, but it got to the point where it's just like, they start managing the probability. It's just like, well, it hasn't happened yet, and we got to do something. So, like, life just went on as normal. Like there were bombs dropping on the city, and people were just like commersing as they normally would. And I think it's just one of those things where after a certain amount of time, if nothing bad happens, you just sort of get numb to the idea that something bad could happen. And then you make it even worse because you've got people selling insurance, got, bomb dropped on your head insurance, right?
Yeah.
And every time you buy it, they're making money hand over fist on bomb drop on your head insurance. And every day it doesn't happen. And you're just like, why am I buying this insurance? I'm giving all my money away to these morons. And so everybody stops buying insurance, right? And that's where we are too, at least on the options chain, where people are just like, we know everybody's selling puts, and it's, the biggest beta on the market right now for like the last year. Why should I keep giving my money to these people who are just using that money against me to push the market higher, right? And that's kind of an interesting point to be at, because if there's not a steady supply of vol, there's nobody to sell it to.
Yeah.
And you can kind of see that. It's like right now, you look at vol and you're like, why is it under 13? Well, it's right around 13, but earlier this week it was like well below 13. And you just start thinking like, why? Nobody's even buying puts anymore.
Yeah. It's so confusing. Like I just I don't. Maybe the thing is though is maybe they are, but God, I forget the name of that ETF. There was this ETF, like a shortfall ETF on SPX. Its yield was 15% quarterly.
Yeah, I believe it.
Like, and then if those are the kinds of yields you're getting from shortfall, like I can see why it's just probably so overcrowded that it's like trying to find a garden gnome on a 1930s New York Stock Exchange. You're not even gonna see it, right? So I bet there is some hedging there, but whatever there is, whatever hedging there is just so drowned out by a sea of short volatility.
Yeah.
And and part of what makes me think this is the way that the market is hedged intraday, right? Like the
Go
V
on.
the extreme reversion to zero up or down intraday, right?
Yeah.
Like
Yeah.
it's violent. It is like there is a giant with a giant cyclops with a huge club, right? And every time the market starts moving to where uh, implied volatility starts going up, it just gets smashed.
Yeah. Yeah.
And variance, right? Even crazier is variance itself is getting crushed intraday, right? And that's just it. Just is if we want to imagine the composition of market makers, right, for the entire options market, there's an aggregate tendency that can be elucidated from these behaviors, right? And the only thing I can think of that would result in this type of variance crush, especially so explicit and obvious, is that it is market makers hedging off their vol
Oh yeah.
and in
Market
just
makers are so long ball.
yeah, and in ungodly amounts, like just unbelievable amounts of it intraday, like to where the market can suffer a 50 bip drop in like you know a minute or two, or I guess like 5-10 minutes, and still just reverse, and go back to where it was as if nothing ever happened.
Mm-hmm.
So that alone, right? I guess sort of it's not necessarily that the market in aggregate is thinking to itself, I actually don't care about these risks. I think the market in aggregate is saying, well, this is where I can get better yields than treasuries still. This is where I can get, the risk premium on these is low enough because of such high yields that it is an attractive thing to do. Um,
Yeah, I mean, and that's really the only way that the stock market survives, these higher rates, is to just continue to pump out significantly higher returns than those rates.
Yeah.
Um,
The risk is that it's so concentrated in a single instrument, right?
yeah, well, what's really interesting is that the types of trades that people are making and getting into in the equities market are also consolidating as well, right? This is everyone keeps talking about, this increase in breadth that's going to happen, and I think that's a really big piece of this puzzle to keep in mind is that increase in breadth is not happening. Has not happened in any way, right? Yeah, I mean, some people look at IWM and say, well, IWM's gone up a little bit, breadth is increasing. But if you look at the relation between, how mega caps have performed versus how everything else has performed, it could not be worse, right? The mega caps are a tide that lifts all boats a little bit, but there's no cycling, right? And I put this in my weekly update that I posted like 2 hours ago, or like an hour before the stream. I mean, even just among what I call the Fantastic 15, all of that money is consolidating into one stock, Nvidia. Like it's coming. Apple was of those Fantastic 15. Apple start of the year was 15% of the options delta of that group. It's now like 7, and all of that money went to Nvidia. Tesla was like 20-ish. It was the biggest one at the time. It's now like 10 or less. All of that money went to Nvidia.
This is
Um,
actually the thing that scares me is that like I know like for all intents and purposes right now we should just be bullish, but and I'm not trying to be with this statement, but that leverage ratio is not coming back, right?
I don't know what to feel about this chart. Yeah, because I mean, so I'll say this that the pieces that go into this are contract value and delta value. The ratio of those two is the leverage ratio. If you look at the contract value, something we lost in calls, we lost something like $120 billion, just fell off the chain and expired last Friday. And by this Friday, we had added back like 70 billion of it in 1 week. Now,
How much of that was those contracts just going in the money that had already existed there?
I agree. I've thought about. I think I would have to run more calculations, but I think it's probably a significant amount because we did jump, right? We did that jump to 5250 ish. And so I think a lot of that was just contracts going in the money, but it's also I think people just piling back in. Yeah, this chart.
Yeah.
Yeah, Tesla went from like 25% of this group to like 9, or I guess it's like 12.
Yeah.
But Nvidia is now like 33% of this entire group, whereas it was like 8% at the start of the year.
Yeah, this is stock market equivalent of reaching for the shoe event horizon.
I don't know what the shoe event is, but now I want to go.
This is, I mean, yeah, so this is, I mean, from a trading perspective, this is very concerning, right? Because, from November through mid Feb, it was very easy to just be like, okay, just buy short dated calls, buy Vega puts, don't stress, right? You're just like fucking, you're covered for every eventuality. But with leverage declining and this rapidly, like it's kind of picking up steam too, right? And even though call
Yeah,
leverage is coming back, it's not coming back substantially, which all
yeah,
points to like what I was saying earlier is like bull confidence here is diminished pretty
yeah.
significantly.
To whatever degree they've come back in, they're coming back in much nearer to the money.
Yeah, and they don't seem to have the support of all that short vol that they did previously. Which probably frightens even them a little bit, right? And if the short vol's not coming in, then the call leverage has got to go down. And if the call leverage goes down, I mean, this market's built entirely on the idea that derivatives are going to keep coming in and keep driving it up. And when that function stops happening, this can all fall apart at like a moment's notice, right? And I don't want to say it's stopped happening, but it's significantly reduced. Like the leverage into that is significantly reduced, and I can't see it increasing with dollar value rocketing up and Japan getting tighter on margin, right? On the leverage through the carry trade.
We need more money to come in, right? And if the the $120 billion comes back in, so I don't want to say 120 billion. I really need to stress that the biggest freed up amount of capital is really just in cash settled options, because all the calls in stocks and ETFs, when those expire, right, then shares just change hands, right? Shares for money. So yes, the people that are in stocks are up bigly with the shares that they acquired at expiry. But if they want to redeploy that, they're going to have to sell, which sort of defeats the purpose. So really, I think and maybe I can run these numbers later, but really, I think the thing to watch is the cash settles, right? Because those people are free to relever at a
Yeah.
moment's notice. And that's still large. I mean, SPX and SPXW combined is like 60-70% of the entire market. So let's say 70 billion of it, which we saw come right back in 1 week. So maybe that they all just already jumped right back in. I don't know.
If that's true, that's really bad. Like,
Yeah. I mean, it's really bad, but it also would be poetic in terms of markets, finding balance, is that they gained all that money and then they just dump it all right back in. They'll give it right back.
yeah, that's
Um,
fair.
but yeah, I mean, we're at a point where the total amount of money in the options market is significantly higher than it was even like at the end of 2021. And so you have to think, where's all this levered cash going? Where's the next batch of levered cash going to come from? Who's the next bag holder to come in and put their dollar on the table? I mean, at some point we have to run out, right? I mean, maybe that's me being
Well,
naive.
excess cash from the carry trade, that excess 0.1 levered up to whatever it was, right? That's gone. The BTFP is gone. I mean, yeah, the discount window, but who the fuck's gonna leverage that right now? um, I mean, even the yeah, this is tough. Like,
Retail's all in.
are you gonna buy like the 3 and the 6 month with inflation expectations skyrocketing? Yeah, retail's all in. All the money for fucking retail's like 48% exposed to stock equity.
So I guess retail could go even more inner. I don't know.
I mean, I don't know if they'd have well, the wealth effect needs to be stimulated more for that to happen. And, the market only closed like 150 BPS higher, right? It's not like we had like a 500 BPS week. And even that looks like it's failing already, right?
Yeah, well, we hit my big 5250 limit, and then it just started, just like stopped.
Yeah.
And I do think we are finally, I think we are getting pretty close to the point where all of the vol hedging and all of the short squeezing that's been helping the bulls is largely expended. And so now if bulls want to trudge higher, they're going to have to buy every delta themselves.
Yep, and I can say from the last 2 days of this week, they seem so far unwilling to do that. We saw a call positioning retreat Thursday and Friday. I don't know, man. I don't want to say like this is a top, but it's like,
Where's the next dollar coming from?
yeah,
That's what I'm missing, right?
that's what I can't figure out.
But
Is I
then
can't
but
figure out
then you
where to get
go
the leverage for it to go higher.
but then you go and look at the financial news, and you look at financial social media, and everyone could not be more full bull. I mean, there's people that are just like calling for SPX 6 or 7,000 by the end of the year, and that's not even that crazy anymore
Yeah, I think
because everybody is.
Goldman put out a $6,000 dollar tentative estimate on Friday.
Yeah, and I think at some point it's like, okay, everybody's full bull, which means everybody's all in, right?
Yeah.
Because the only way that you could justify being this heavily one-sided into a trade is if it's going to continue to go higher, and the more you get heavily one-sided, the higher it needs to go.
Yeah, well, we just talked about like asset managers are 28% overweight equities, which is, I mean, huge on a 60-30-10, right? Which is
Yeah, but you
basically just
also
a
on that
60-40.
but on that same chart, wasn't it also historically they were much higher in the past?
They've been higher in the past, but not
So
significantly.
maybe
Let me
that's where
pull
the
it back
next
up.
maybe that's where the ammunition comes from to get us, to 54 or 55. But then how do we get to 6,000? That's, at that point it's like, really, where is this money coming from?
I mean, yeah, yeah. So we've seen it as high as like 60% overweight, 65% overweight in the past. But that was, the dynamics were different in the macro back then. We don't we don't
0% yields. Yeah.
yeah, we don't have that kind of leverage now, right?
Yeah, that's the crazy thing is we built this market up to 5250 on leverage, not on just, more buying. It was just buying with more leverage, which is the scary part.
We built this market on rock and roll.
We're gonna chop at 52, 50, 60 for a week, dump back to 5100, then go up and squeeze everyone and move to a new all-time high again. I mean,
Yeah,
that's happened.
probably.
That's happened a few times. The problem is those pumps, those turnarounds, and that like the big epic knife catch that requires a fuck ton of leverage and risk tolerance, because you have to let all of your short puts fall, like use huge piles of short puts fall back in the money, lever them up, and then pump it even higher. And we're closer to haircuts here than we are to margin increasing anywhere. The currency market risk that's a big deal. And while they're getting more dollar denominated, leverage, they're losing leverage in the carry trade. And we don't really even understand at what rate yet, because it hasn't been going on very long, right? We're only 5 days into it, and the yen, like USD JPY, has moved. I feel like it's pretty significant.
It's up at 5140 right now.
It's moved. Yeah, it's almost moved up like 3%. It's almost above its all-time high.
Yeah, that's right. Just pushing there.
Yeah. But this time, there's no Bank of Japan to step in at that all-time high and correct things, right? There's no padding. they're not participating in the FX market, right? Outside of extreme volatility
Yep.
events.
Yep.
And so before you could do this and be like, oh, fuck it, the Bank of Japan has to step in. They have to do this, right? But now they don't. They can just buy more JGBs and make it even worse.
Yeah, it's such a weird thing. Imagine
Dork,
this, Kirk.
we know you're not paying attention, Dork.
Imagine this, Kirk.
Yeah.
Imagine a margin haircut on 0 DTEs.
I mean, that's where it could
No.
if
No.
if
No,
FINRA were to cut margins intraday.
Wait. Imagine having a marginal requirement on 0 DTEs.
Yeah, that's the thing. Yeah, currently, I mean, the way they're managed, there's basically no requirement for like the short strangles that get sold off every day, right? Because vol stays crushed, and you know, realized vol remains basically non-existent into close. And God forbid it moves out of that range, it's immediately corrected by close.
Yeah, Jay Fresh and I discussed this a bit while you were out banging your neighbor.
Yeah.
And it, you know, the whole thing, right? This is a, I think, kind of the biggest sort of systemic risk to the equity market, besides just the fact that almost every call in existence is on Nvidia, is that is that short volatility products are yielding like 15%, right? So if you're, a fund manager out there and you're seeing this 15% yield on short vol, and you want something for your fixed income fund, I mean, fuck it. Like that's so attractive,
Yeah,
right?
it
And so
is.
it's become so incredibly crowded that even if there were bears, right, they would just be
There are no bears, which is bearish.
You don't. I mean, you don't need them.
you don't
There are. We can go over that if we want to, but there's a couple bears, and they've been going synth short in like large numbers.
All right. That's bad. We don't want bears. We want there to be absolutely no one buying all the way down. We just want it to go straight down.
I mean,
Bears turn down into chop, and chop masks down, so it doesn't scare people. So bears paradoxically kill themselves.
well, Jay Fresh, the real bears are people who were previously bulls, right? Those are the true
Yeah.
bears, because you know what they do is they sell shares of companies.
Yeah.
Yeah.
So, I mean, as much as, levered instrument bears, like guys who buy puts, those are still just bulls. They're just hedging their risk, right? That's kind of what I was mentioning earlier too, is
Yeah.
that
Yeah.
like anything their risk is immediately drowned out. And kind of like, why is it? It's not even worth it, like you were saying. But a real bear is somebody like, hmm, I don't know. Let's just say Tom Lee. Okay, Tom Lee's a lot of stock, right? And we're using him as a There's a lot of Tom Lees in. Okay, so all these Tom Lees are long stock, right? And sometimes they hedge with puts, sometimes they don't. Sometimes they sell calls in their portfolio. Just doing Tom Lee stuff, right? Um, but Tom Lee has the opportunity to become the big bear in the market if he realizes that he needs to not only hedge downside, he needs to hedge downside for longer than he can possibly do while maintaining his long position. That's the real bear, right? Because then what he's doing is he's selling his shares. And when the other Tom Lees catch wind that he's no longer, fundamentally long, they're like, oh shit, maybe they see the same warning signs that he did, and they all start selling shares, right? Now there's no longer the support of sold calls, right, to squeeze into to push the market higher. And even further, right, because they're selling shares, they're probably not going to be selling puts into the selling of those shares. If anything, the only thing they'll be doing is buying calls, to sort of replace their delta exposure and their beta. But that's a depreciating asset, so they do not want to be in those things for long, and they're definitely going to have stops on, right? That's the real bear, is when that starts happening, and it happened in
Yeah.
20.
I think that chart I showed earlier about like the up and downside volatility is very telling in that regard, right? Is that, we've been seeing this constantly greater upside vol than downside vol in the S&P. And I mean, that also means that our time spent to the extremes of the upside is getting shorter and shorter because there's profit takers. And yeah, you're right. The more like in aggregate, the more of that long position that's scaled away, the less support there is on the next upside move, which means it's more volatile. It doesn't last as long, right? It's shakier. The foundation upon which it is built is no longer as reliable.
Right. And that's I think that's part of why.
And I think we're seeing that post FOMC, right? Like we shot up right away, like the bulls were doing their thing, and then nothing, right? Like it was just we just like tapped the max and that was it.
Yeah.
Here's what I don't understand. Back to the Fed. If you look back at like 2022 and even parts of 2023, but much more so in 2022, the Fed definitely positioned their rhetoric hawkish or dovish based on the price of the market.
Oh yeah.
You could definitely tell if the market was too high, they tended to come out more hawkish, even if the data was moving in the right direction. And if the market was getting too low, they started to come out and, give a little bit to keep it from going really, really low.
Like prior, like the June Fed meeting.
Yeah, and so that I think was the most surprising part of this last FOMC was that animal spirits have been revived to such an extreme degree. What is the downside? Like what could they possibly be seeing that still makes them not want to at least sound a little hawkish, right? If everything is going so well, what does it hurt, right? If the market drops even 10%, like who cares?
Banks.
Yep.
Those equity, those expanded equity holdings are supporting the banks. They need that. They need those equity returns on those holdings. Otherwise, they're fucked.
Yeah. Have you seen, like, you remember we talked about it? I mean, a bank revenue from investments is like it went through the fucking roof last year.
Yeah, I know.
And it's still going through the roof.
I mean,
So,
there's no hedge fund or retail buyer in the world that's bullish enough to drive the market up this hard. This is just banks. This is big fucking banks buying everything they can get their hands on and selling short vol, right? They're the only people with that kind of leverage, that kind of margin.
Yeah, and I agree, but so maybe that's where the money comes from then. They have plenty of reserves to do more.
Oh, they can't touch their reserves though.
Yeah, they can.
Can they?
There's no limit. There's no limit.
I mean,
There's
their
no
reserves.
limit.
Their reserves are pretty much already in it, like already in markets, right? They are reserves because they are the same as cash, but they are not just held as cash.
Yeah, it'd be interesting to. I'd have to go back and look and see what the breakdown is, but I mean,
Like they
the
can't
Fed
risk
still
those
says they have.
assets, not with Basel IV on the line. Yeah,
Yeah, Basel
they
4 is
have
an issue, but
ample reserves for the time being. But even JPass spoke prior, like at the FOMC, that they're just ample and not, what did he say? Not
couple.
I forgot what he said. No.
Sufficient or like yeah, I don't remember the words either. I know what you're talking about. I actually was such a nerd. I listened to it while I was driving to the airport.
He wants them to be even more robust than they are, and that's a requirement for Basel IV, right? Is that they need to bump up those reserves, but those reserves are also, um, going to be obtaining the risk-free rate at a minimum, right? And they're not likely to risk them in the equity market. Like, I don't think they could risk those reserves in the equity market without violating, their current reserve policies,
Yeah, I don't know.
because that would be exposing the majority of their holdings to huge losses.
It just yeah, I don't know. Seems like every week we're like, where's the money going to come from? And magically more money comes out. I mean, for a while it was all just coming from leverage, but now that leverage is declining and the stock market is still going up, it's is it just a Wile E. Coyote event over the canyon, or are we missing a large stack of money? I tend to think it's a Wile E. Coyote.
We're not seeing reserves decline. I can tell you that much. Money market funds, as we all know, are not on the sidelines at all. They are fully deployed. Um, I mean, there's always something you could squeeze a little bit more leverage out of, right? Bitcoin, for instance, but not enough.
So, Gert,
Yeah.
here's a big event that's happening this week that I think we've all overlooked. Jerome Powell is going to be doing an interview on NPR's Marketplace with Kai Ryssdal.
What?
Yeah, you think Kai Ryssdal is going to put the screws to him?
I don't know. No.
Oh,
One doesn't screw J-Pow. J-Pow is the screwer, not the screwy.
Yeah. Yeah, I agree. And NPR is not gonna.
I mean, interesting. Is that going to be televised?
no, it's just going to be on NPR's Marketplace, so it'll be at 3 p.m. Eastern, I'm
Ooh.
guessing. I think that's when
what
they
day?
might do it in the morning.
I mean, J-Pow's post FOMC paid vacation is always a volatile market event. So I mean, it could have some effect if he's more hawkish or more dovish. It might cement feelings in the market.
We get PCE this week.
We do
That's
have
fun.
PCE this week, which is, I think, largely what the market's waiting on. If PCE continues
Well,
up, I think we start to.
Yeah.
I think
Most
those
people, though, I mean,
inflation
PCE is
expectations. What's up?
PCE is a calculation just between CPI and PPI, right? So people largely know what it's going to be.
Yes. They have an estimate, but it's generally off.
Yeah.
Like, everyone should have known what it was last time, and it was red fucking hot. So, I mean, that's just kind of an exploration of the analysts' estimates and their diligence, more than it is like. I mean, even the Cleveland Fed got it wrong. I didn't, but no one's bragging or anything.
See, what's up on the wall next week? We got 2-year.
We got some
5-year.
We got a few auctions, but I feel like demand from China should be really high, so we shouldn't really have to worry about tails in any substantial way until post PCE, right?
You know what's been interesting?
Inflation expectations are set even higher that we see tails.
It's been interesting. So the tails have largely gone away recently on
That's because
duration.
of China.
Right. But the thing that has been high a little bit,
The bid to cover.
not the bid to cover, the percent taken by primes on the
Oh,
short, like 3 to 6 months has been quite large.
I
Actually, I
haven't
think
been
we had the
watching those.
highest. I think we had the highest print on that. It was like 44% or something like that on the. It was either the 3 or 6 month, I think, and I think that was the highest that had ever been recorded. And they're commonly like in the 30 to 40% range lately, which is quite high. I mean, you want them to be the buyers of last resort, right? They
Yeah.
they have to buy some, they have to bid, right, if they want to be considered, the primes for that market. But they don't actually want to own all that. So that's I think that's something to keep watching. As the tails come in. If China is a big buyer, then yeah, we shouldn't expect any tails or anything on duration. But why would China buy where the rate's fixed, right? That's kind of just wasting money.
Are primes mandated to absorb excess demand in auctions, or does this just show that they're heavily invested in them? They're mandated
They're
to. As long
they're
as they want to,
mandated to,
as long as they
yeah.
want to continue making the market, they have to provide liquidity at the auctions.
Yeah, and this is something people remember this back when everybody was obsessed with Ken Griffin. Ken Griffin would love to get in and be a prime in this market and become
Yes.
like a Goldman Sachs kind of thing. So it's a very lucrative space because you make the market for all the pension funds and everything like that. But with great power comes great responsibility. You got to buy it if no one
And
else
this
is
is this is
stepping
where
up.
the effect of quantitative tightening is felt hardest by banks, not in the Fed's roll off, but in the lack of Fed participation in these auctions. So the Fed bids outside of a few mandated auctions, the Fed basically bids zero right now. And normally the Fed's taking the brunt of that illiquidity, right? But now the primes have to absorb that. And that's one of the things that kind of is supposed to tighten credit conditions. Now, it doesn't tighten credit conditions, and they can then immediately take those bonds that they bought and go leverage them up in Japan at, 10x. But normally speaking, provided that relief outlet wasn't available, that it would tighten financial conditions dramatically. Man, the auctions are big this week too. 2 years 66 billion, 5 years 67, 7 year 43. We've
Nice.
got a 2 year FRN at 28 billion as well.
That's a
That'll
substantial one.
The FRN might be a kind of interesting auction, and that's Wednesday.
Yeah.
It'd
Because
be
what did they sell last week? Was it a 5 year or a 10 year
It's
FRN?
the tips. That was the tips.
Oh, that
10
was tips. Yeah,
10 year tips. Yeah,
I mean that came in hot.
yeah. That had
The
a
rate.
yeah, had a pretty fat tail, which was not
Oh,
good.
it had. I didn't know it had a fat tail. I just saw it, the rate came in hot.
Yeah, it was up quite a bit over spot. But I mean that's because inflation expectations are higher, right? They're higher.
Yeah.
I mean, with
Right.
the Fed in action, their inflation expectations are getting higher in the long run, and we're seeing we should be seeing that reflected in yields. We're just not right now,
Yep.
but we are seeing it reflected in the dollar, which means that the yields could rapidly catch up
Yep.
should
I
buying
agree.
from China slow down. And that could create quite the volatile event, right? Because that spread between UST and treasuries is getting really, or UST and USD is getting really wide. And the arbitrage opportunity there is probably pretty great.
Yep.
Hmm.
So I have one more harebrained theory, and then maybe we could start wrapping up because my family's going to start getting angry if I
Yeah.
stay in here all day.
No
But
worries.
what if our disinflationary period was just us shorting inflation expectations? And those shorts are all getting squeezed out.
That's possible.
Like oil, commodities.
Yep.
And they're all
No,
coming
no.
up again. And everyone just kind of talks about, oh well, it's all the global chaos is hurting supply. But what if it's just shorts getting squeezed out?
I mean, the implication there, and we've actually talked about that in the past, right? Is that like there's a very strong handle on anything that would like there's been oil shorts, like excessive oil shorts, through all of these OPEC cuts, through dwindling supply, through cutoffs in refining, right? And yet, the oil shorts persisted and they hung out and they stayed and they shorted and they shorted and they shorted. And it's just recently that we started to get like, market direction in oil that kind of and the shorts are still there. There's still a fuck ton of
Yeah,
shorts on oil. But oil's really starting to push back against them. But I mean, the implication of somebody or participants being so large as to control the expectations of future looking markets is kind of insane, but I don't think you're entirely wrong.
yeah. It doesn't have
But
to
then
be
it's
like.
kind of like chicken or the egg, right? You've
I'm not
got
implying it's being controlled by a few people. I just think it's a rational position to enter into if everybody thinks inflation's going to go down, whether it's by immaculate disinflation or whether it's from a global recession, right? It's smart to short it.
Yeah, well, I mean, but then that okay. So if you're not going to infer that large entities are doing this in order to drive inflation expectations down, then you do have to ask if it's chicken or the egg. Like, did they short and drive expectations down, or did they short because expectations were falling?
Yeah, okay, fair.
So, I mean, it's kind of hard to avoid that statement. But I mean, I agree that there is some of that going on. It's very hard in markets that large. It's really hard to tell, but there have been instances where obviously the correlations that should exist have broken down, and we've seen oil dumping while output's going down, right? And like that doesn't make any fucking sense, but it was happening
Yeah,
anyway. We see
yeah,
we see equities rocketing and treasury yields rocketing at the same time, and that shouldn't be happening, but it does, right? So I agree. There's some of that going on, but how much and how effective those controls are is definitely it's probably not something that we could answer.
fair. I like thinking about it.
I
But
do
yeah,
too. Yeah, I've thought about it a lot myself. But it's tough. It's where do you cross the line into this is just a conspiracy versus this is actually happening?
and the internet, we can just everything's a conspiracy. We'll get more views that way.
That's true. Yeah.
I don't get what you guys are talking about. The entire economy is rigged. It's all made up.
I mean, we all know that that's true, but that's kind of boring at this point. People need more.
We want to know. I mean, who cares if it's rigged? It's about how it's rigged, right? That's what matters,
Yeah,
or at least for us.
money's not real. It's all made up by people in power
Yeah.
to control people not in power.
Oh, to be a have and not a have.
What am I getting
That's
hit
great.
with? Research published in the Journal of Alzheimer's Disease suggests this compound could be used to treat brain disease. The fuck are you talking about? Is this like an ad? You didn't even name the product you're advertising.
They have a green name. They're like a member.
Yeah, I
Did
know. I
we?
don't, maybe it like cut off
Did
something that
somebody
Elsie
gift?
said.
So, somebody gifted a bot.
No, Marpo's been here forever. All right, I don't know what the fuck he's on. He's probably talking about some other stock, and like the rest of his chat got cut off or something.
Yeah, Marpo, we don't see the rest of your chat. Did you say something offensive to someone?
He's clearly talking about some biotech stock.
Yeah, or some.
That's what I
medical
love
pump.
about the
Yeah,
Dillionaires. After 3 years, they've never given up asking me about Penny and biotech
yeah. My,
and
you know,
earnings.
with Alzheimer's disease, you have to be careful because nobody really knows what causes it. I mean, they know that they have some theories, and they're pretty decent theories, and they have some measurements to sort of confirm that. But there's also a lot of data that's been collected that sort of throws those theories into question, and so I don't want to touch. I wouldn't touch any claims with Alzheimer's because nobody knows what's going on with that.
Yeah, I mean, I don't know what stock you're talking about, Marpo, but I can generally say that anything in that space carries a high degree of risk until it's approved as a drug, and then the company still has to have the money to produce said drug after the approval process, which is even more rare. So it's one of the reasons I generally try to avoid anything in that space. When strangles on SPX instead of straddles, VIX 16 and higher. I mean, for now, I mean, the advantage of strangles, and we've talked about this before, is that realized vol is crushed. So you're going long the increase in realized vol, but you're paying less for the premium, right? So it's really hard to carry a straddle for like 3 days and not realize gains. Like I don't know if there's been a period like a 3 day period where a straddle hasn't printed on the market in like 2 years now. It's almost 2 years, year and a half. And then intraday you can just short strangle the opposite way because that's where they crush the vol. So all the
Yeah, they're
vols.
squeezing all the vol into very tight range. So yeah, until they stop doing that, which they haven't.
Yeah, basically you have like the overnight trading session and the intraday session, and realized vol expands here, contracts here. And so, if you're long realized vol overnight, you make money. If you're short realized vol during the day, you make money. And this has gone on over and over and over again for months and months and months. And we've had very, very few periods where an overnight strangle would be the better position. There have been a couple, like late October 2023, like when VIX was a little more elevated, but usually strangles get better the higher vol goes because you have bigger intraday moves.
Yeah, so you're thinking about if you think about like a normal distribution, as they short vol, they squeeze the tails in and fatten out the middle, and so um, the straddle is going to be underpriced relative to what its performance is going to be. Conversely, if everybody's going longer vol than the normal distribution would suggest, then the middle will get squeezed down and the tails will get fat, and so you don't want to pay for all that in the middle. You want to just pay for the fat part, which is out farther away from spot.
Yep. I
All
wish.
right, let's give. Huh?
I was gonna say I wish the pickle jar had just listened in aggregate and just done nothing but straddled every night for the last 2 years.
Yeah. All right.
Everybody would be so much richer.
Let's do our predictions and let's settle up for the
Yep.
day. My family doesn't kill me. Who won last week? Was it Dork?
I think so, but not because he made a good prediction. Just he he just ended up closest to the actual price.
Damn straight I did.
Isn't that the game?
Yeah, kind of.
I fucking won. All right.
You won with your like flash crash to flash boom.
To the mother of all gambles. Yes.
I won three. Me and you, Jay Fresh, won 3 of the days of just flat, boring trading. But we just assumed too much of the Fed.
Yeah, we definitely did. It was so it cost them nothing to be a little hawkish to tame animal spirits a little bit, and they just blew it.
Yeah, they did. Well, I mean, I'm not even sure they tried. It
I
was,
need to go
yeah.
listen back to the stream and see what I said, but I'm pretty sure I nailed the Fed narrative.
You actually just kind of nailed everything. If you just like smooth your prediction, it would have been pretty good.
All right. Who wants to go first?
I can go first because I gotta get something installed in my house. They're on their way here.
All right.
Sex chair? Sex
Yes,
suite?
it's a sex chair that's bolted to the floor, you know, for extra stability.
Damn.
We are going to open flat and close the week.
Oh shit, we're just doing a straight line.
No,
Oh.
it's not going to be straight. Yeah, it was going to be a straight line to the price of 50.15.
Shit.
50.15?
Yep.
Interesting. Right to the collar, huh?
That's exactly right.
The collar always gets blown out. That's like part of the deal. The collar can't make money.
All right. Shea Fresh?
Wait, is that just 1 week? What are you doing? Is that 2 weeks?
That's 1 week.
No, that's 2 weeks.
Was it? Oh shit.
Yeah, you're in April, friend. March 29th.
Where the fuck? Oh, okay.
Okay, that looks much more violent now.
That's still not right.
That's right.
Oh, I'm on a lag. Hold on. I'm way
Okay.
lagged. There we go. Okay. I was looking at you in the past.
I thought I was on like the 15-minute time frame, not the hour. But all right. Anyway.
I want to go last today.
Okay,
I don't know
fine.
why.
I feel like you're gonna be bearish too, and it's my responsibility to
Did you just
protect.
assume my
Yeah,
species?
yeah, I did. I just assumed your species, and also I think it's my responsibility to protect the pickle jar
Who are
from their.
still using these for actual trading.
Yeah, I know. I feel like there's no small number of people are like I've been like, these are just bullshit predictions, and they're like, why are they so right then?
Most weeks I'm just like, I gotta get out of here. My kids are screaming. Straight line.
When's Powell speaking? What day?
Wednesday, I think.
Wednesday, huh? Shit.
Ooh, Friday the market's closed. It's a short week.
Yeah, it is.
So we've got to bump everything by a day, right? Or did you already do that? 1, 2, 3, 4. Oh, okay.
Yeah. This might be like flatter, but I'm gonna fucking put it at like 25. End of the week, 51.90. 5,200. Oh man, is this gonna be the worst week ever?
Yeah. gonna just focus on work. I don't even think I'm gonna look at it.
Ugh, okay. Like, I think we can lose a little ground and then just stay flat. Unless something shifts. This seems appropriate. Alright, man, your turn. So I got us up a little bit tomorrow. Retest 250, then down 5200, bounce to 25, back to 5200.
I'm just gonna do a straight line to 5175.
You bastard.
Nice.
What a dick. Yeah,
Price is right.
PCE
gotta
is Friday.
But it's closed.
But you also have to
that's
assume that
weird.
PCE is going to have an immediate impact on the market, which I doubt it will on a Friday. Also, JPM collar roll and end of the month. So I think if we saw any bearishness from PCE, it'd be next week, not this week.
Hey, look at that! What a change of pace. We're all
Thursday.
slightly bearish.
Wait, is PCE? Hold on. Is PCE on a day the market's closed?
Yep.
Oh shit. Yeah. Okay. So I'm definitely sticking with my assumption, but that's yeah. I might be hedging the downside a bit going into next week.
Everybody else will too, which is why you're going to lose this prediction.
I don't have a prediction for next week yet.
I know, but you're going to lose this week because everybody hedging the downside is going to pull the market down.
Oh fuck! God damn it, Dork's gonna beat us again.
Maybe. I don't think it's going to pull it down that much.
I feel like if it is, we're just gonna dump tomorrow. But I need to look at. I haven't looked at the options data yet, so I really have no idea. Does that look? Is it like bad?
Looks normal.
Yeah, it looks pretty flat, boring.
Yeah, just hugging Gamma Max all the way to.
We still have that. We still have that support at 25 that I think is going to be hard to break down through. But we are getting a lot of synth short at 5200, which is weird but interesting.
I love it.
It's pulling. Yeah, all the synth shorts keep crushing the call gamma, which is. I mean, I talked about it a bunch this week on stream. But I don't know if you guys saw it. We keep getting these like in the money synth put positions, like synthetic short futures, and they're all like designed to crush the out of the money gamma at spot. So like here I can like show you what they look like when they come in. Where is it? Here we go. So like I don't need to leverage it up. You can see so they'll sell like where we close at 35. They'll open like this. Right? And then like wherever all the calls are being bought just out of the money, they'll like crush the they'll design it so it like crushes the gamma just at spot. See this? So it just creates this like huge wall of negative gamma to the upside. And this every time they do this, all the zero DTE calls just get destroyed.
Yeah, I think the market makers are just finally no longer having to hedge all their long vol with short vol. and I think we're starting to see that.
Why did Yield Max, Tesla, and YMAG end up on Reg Show? Ooh.
All those
Probably.
levered things are all on Reg Show all the time
Yeah,
because they're
well, I mean, specifically on those, it's probably because I don't know, AUM has gotten fucked. Is Yield Max Tesla, is that the long one? Or they're just shorting the fuck out of it? Or they're shorting their collateral, which is like treasuries.
yeah, who knows?
Yeah.
We'd have to dig. All right, well, Dork's getting his sex chair installed.
Yeah, he's gone.
Yes, sir. No,
Right.
I'm here. I'm just trying to figure out how to make my fucking blinds go up.
Just
Fucking
call your
and you can't lift them.
just call the superintendent for the building and they'll fix it.
What? There's you mean the HOA?
No, I was
Jerk.
making a welcome to homeownership joke.
Dick.
Wait until one of your pipes bursts or your water heater breaks.
Well, that was replaced in 2022, so I think I got a little bit of time.
You'd think.
That's why I said I think.
But 1 in a million of those is going to break like, in 2 years, and you got it.
Thanks. Sorry, the screw guys did show up though, so I got to dip.
All right. Enjoy the chair.
Thank you for tuning in, both of you, coming on. I appreciate it.
Yeah, thanks for having me, bud.
Always fun.
See you guys next week. Later.
See ya.
All right, guys. Thank you so much for tuning in. I appreciate it. I will see you all tomorrow morning. I'll have Pickles Picks out tonight. If you had any questions that you didn't get to on the stream, feel free to reach out and ask me. I should be around for most of the rest of the day. Later, guys.